get another opinion and overview on this market environment. Joining us on the phone from Greenwich, Connecticut is Barton Biggs, is managing partner at Traxis Partners. He oversees about $1.4 billion in assets. Barton, good to have you back with Matt and myself. Last time we talked with you back on August 18th, you called yourself a cowardly bull. Are you still that in this market environment?
No, I don't think so. I mean, I think that what happened yesterday was that it was like biblical times. I mean, in biblical times, the God's people were misbehaving and vacillating and not reforming themselves. And then, as the old Negro spiritual goes, then God gave Noah the angel sign: no more water the fire next time. And I think the markets have given the authorities the angel sign, and that they've got to change and act, or we're going to go into a double dip recession, and we're going to go down another 20%.
Well, history has shown us so far when it comes to the officials that they don't really listen, it seems like, and pick up on these market signs. Would you bank then we're going to go down another 10 to 20%, as you just said, that it's almost guaranteed?
No, and nothing's guaranteed in these markets, and I'm not going to bet either way. My exposures are very, very low, and I'm going to lay in the weeds and stay close to shore and wait and see what happens.
How low are you, Barton? Because I think last time you talked with us, you were about 50 to 60% net long. Where are you now?
20.
20%. So you've come down a lot.
Well, I wish I was minus 20, or I wish I was zero. But, yeah, I'm 20.
Hey, Barton, what do you do with your cash, or do you buy gold? I mean, obviously, there's nowhere to get yield right now that's going to be safe at the same time, right?
Yeah, and I mean, I don't think gold is a haven. Gold's proving it's not a haven. It's another asset. And so, look, in times like this, there's nothing the matter with cash.
What do you think about emerging markets? Because I know you had been a fan. You've made some personal trips to China. Is it a place to invest right now? Because it seems to be a concern for the markets.
Matt, I mean, I don't think any place is a place to invest right now. When there is clarity, and when the authorities move and do something, emerging markets will be a fabulous place to invest, because their currencies have been smoked here and the markets have been hit hard. And so you'll get a big double play. But I'm not ready to make that bet yet.
Hey, Barton, we got some ominous words from Mohamed El-Arian, the CEO over at PIMCO. And what he said specifically, he says, we are on what is likely to be the eve of the next financial crisis, whose epicenter is in sovereign debt issues, a growth crisis, and now a banking system problem in Europe. Would you go so far to say that you agree that we are on the eve of the next financial crisis?
Yeah, definitely. We could be on the eve of the next financial crisis. We shouldn't be, because there are things that could be done to avert it, but they haven't been done, and there's no signs that the authorities are going to do them, and so we could be on the eve.
So well, Matt, hang on a second, because I just want to ask you, Barton, what could authorities do quickly that would appease the markets, calm the markets at this point?
Sunday night, the Europeans could announce a $400 billion TARP for the European banks, and the ECB could come out and announce a 100 basis point a cut in their lending rate, in their prime rate, basically, and I think that would be enough to change the markets in Europe in a major way. And that would be a big first step. The U.S. has got to do some things afterwards, but that could turn the tide.
I was actually going to ask the same question, and I wonder what you think about here in the U.S. I mean, right now it seems to be a contest of ineptitude between the European leaders, the U.S. Congress, and the board of Hewlett-Packard. I mean, what do you expect Congress to do, or what would you like them to do? I'm sure no one expects them to do much of anything.
Hey, look, I'm not an advocate of the Austrian School of Economics and Professor Hegel. I'm not for creative destruction. I want to see an important stimulus program in the United States combined with major reform in Social Security and Medicare and our defense budget. And I think if we did that, we could have a 20% rally, and that'd be a big deal.
Barton, what staggers me is that with all of this going on, it does still feel like Washington is not listening. Do you think, is there any signs that you're seeing that maybe they are going to start listening and maybe take some of the moves that you're talking about?
No. And that's the discouraging thing. There are no signs.
All right. And then that's certainly not a good market environment. One last thing. What about corporate earnings? Because people come back at us and say, hey, check out corporate earnings. They're still growing. That's not a good enough argument anymore. Or is it?
Look, if we're going into a global double dip, corporate earnings projections for the U.S. and for Europe are way too high.
Right.
And so there's major revisions coming.
Going to leave it there. Barton, thank you so much. Barton Biggs, he is a managing partner over at Traxis Partners, joining us on the phone from Greenwich, Connecticut.